Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ximei Resources Holding Limited annual report. Ximei Resources Holding Limited offers a diverse range of products and services across various industries. At the core of its business are tantalum and niobium-based metallurgical products, which include hydrometallurgical and pyrometallurgical items. Hydrometallurgical products comprise tantalum pentoxide, niobium pentoxide, and potassium heptafluorotantalate, while pyrometallurgical products include a variety of tantalum-based items such as powder, bars, rods, ferroniobium, and molten niobium. These products cater to the needs of various sectors like semiconductor, high-end electronics, aerospace, defense, and military. In addition to product sales, Ximei Resources also provides processing services to its customers. Furthermore, the company offers recycled products such as tin hydroxide, potassium heptafluorosilicate, potassium fluortitanate, and ammonium fluoride. With a global presence in countries like China, the United States, Canada, the UK, and Asia, Ximei Resources Holding Limited is well positioned to meet the demands of its diverse customer base. The company's products are used in various fields including optical, medical, and other industries, making it a significant player in the metallurgical industry. As a subsidiary of Ximei Resources Holding Limited, Ximei Resources continues to expand its operations and offerings, solidifying its position as a leading provider of tantalum and niobium-based products. Ximei Resources Holding Limited market capitalization of $6 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Ximei Resources Holding Limited holds a significant advantage in their industry. Ximei Resources Holding Limited trades at a higher price-to-earnings ratio of 27 times, and a higher price-to-book ratio of 3.35 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The net income of the company experienced a significant increase, with a growth rate of 36.6%. This substantial rise in net income is evident from the varying figures provided across different pages, including RM 100 and 83.3 million and RM B 49.1 million. The increase in net income can be attributed to various factors, although specific details are not mentioned. On the other hand, the profit margins of the company witnessed a decline. Despite the initial 20.9% margin, page 23, it decreased further from 21.8% to 20.9%. This reduction in profit margins suggests that while the company's net income is increasing, its ability to retain profits as a percentage of revenue is diminishing. The company's financial performance indicates a concerning trend. According to the provided information, the company is experiencing negative operating cash flow, as stated on pages 14 and 36 of the report. This suggests that the company is struggling to generate sufficient cash from its core operations, which can be a red flag for investors and stakeholders. Management is outlining a comprehensive strategy for the company's future growth. The key focus areas include building a high-quality talent team, launching core reforms, and optimizing management structure. Additionally, the company aims to expand production capacity, promote high-end products in domestic and overseas markets, and maximize market sales and share. A significant emphasis is being placed on downstream demand, with a focus on seizing market opportunities and entering mainstream customers' supply chains. The company also seeks to leverage its raw material reservoir to navigate price fluctuations and supply tightness. Overall, management's strategy is centered around driving growth through talent development, operational efficiency, and strategic market expansion. Concerns over inventory buildup and supply chain disruptions are evident in the provided summary. On pages 32 and 33, it is explicitly stated that there are concerns about inventory buildup. This suggests that companies may be accumulating more stock than necessary, potentially leading to waste or reduced sales. Furthermore, a decrease in prepayments for purchasing raw materials on page 36 indicates a potential reduction in inventory buildup. However, this is not an explicit mention of the issue itself. A separate concern arises from supply chain disruption on page 37. The increased purchase volume has led to disruptions in the supply chain, which can have far-reaching consequences for businesses and their operations. That concludes the financial summary for Ximei Resources Holding Limited. Feel free to comment below, and I will be happy to answer them when possible.